Afternoon. How are you all doing? Afternoon, Danny. Afternoon, Mumo. Afternoon, Ryan. Why am I not showing on the screen? What's going on? Why is it not working? I'm back. How are you all doing? Afternoon. Right, it's Wednesday. I'm back. For those in the US that didn't see me this morning in the member streams, hope you all had a good week, Easter break, etc., etc. Feels weird being back already. Afternoon, Brian, Joe, Mark, Omar. How are we doing? Good morning, good afternoon, whatever it is, wherever you are. Right, this morning we've had loads of PMI news. Very little impact on any of this. Afternoon, Marco. So PMIs are obviously the Purchasing Managers Index, which feeds into the Consumer Price Index, which feeds into inflation, which drives Forex currency prices. So normally these are high impact, high moving news events. And as I covered this morning in the live room, they are not having much impact at all at the moment. You can see today's movements off of this high impact news just not happening. So there's just no movement at the minute. Fundamentals are not driving this market. Trump is driving this market. So it's very difficult to forecast the impact of news at the moment because it doesn't really matter what data says. It's got nothing to do with decision-making processes for Donald Trump. And that is what is driving this thing up and down at the moment. We're still in fear mode, which means that the market is scared to invest. It's scared to put money into anything that is risky. So stocks, any currencies which are high risk, high volatility, Euro, US, etc. They're not going to do very well. Things that are going to do well are going to be gold, Swiss franc, and yen. So very, very little movement this morning off of any of these PMI numbers at all. They did come out fairly balanced, to be fair. So we had an sort of almost as expected manufacturing and down on services, better than expected manufacturing and down on services, which gave us an overall average for Europe of roughly where we thought. The pound, we got an as expected manufacturing, but quite down on services. Typically that as a PMI negative would have a big impact. We'd see an ADR hit off of that, definitely. Not today. So we've had Weller speaking, or Weller is about to speak any second now. We've had a lot of talking head noise this morning out of the ECB. Very little from that, though. If you go back, there's a lot of stuff come out of Bank of England. There's a lot of stuff come out of Putin this morning, but very little high impact news or anything that is really going to move the market, as you can see. So there's nothing really red come out today, apart from the IMF projections, which is the Bank of Japan is projected to raise interest rates at a slower pace, which is negative yen. So even that news, which you would normally see huge movement of the Japanese yen, that happened somewhere around here, nothing. So literally nothing is moving this market at all at the moment. We are sitting there and we are just waiting for Trump. Macron floats fresh snap elections. Yeah, we saw that come out yesterday. Sorry, this is obviously going back. This is from this morning. But there's, yeah, as you see, there's very little. That was yesterday. I was talking about, or this morning, talking about Trump looking, he said he's not going to dismiss Powell, never said he was going to dismiss Powell. Yes, he did. He said if Powell doesn't do what he says, we'll talk about putting someone in charge that will. So yeah, basically very little movement today. It's doom and gloom is all we're ever hearing, but nothing confirmed. So really today's PMI figures, which are coming out for the US, I'm not really expecting a massive amount of movement off of these. If the Europe and pound are anything to go by today, we'll probably get a bit of a whipsaw, nothing more. So unless these all come out really dramatically different to forecasts, I don't think the market's really going to pay much attention to it. The biggest news event today is likely to be Bailey, who will give us some idea of what they're going to do with the interest rates for the pound moving forward. But I suspect he's probably going to say something along the lines of, we'll wait and see what Trump does, and then we'll react accordingly. So, yeah, we'll see what happens this afternoon. nice big pop on the indices, as you can see at the moment. Very big pop on the indices. We've just got an ADR hit as well, I think. You just quickly check. I think we just had an ADR. Yeah, Aussie dollar CAD. Yeah, we got some big movement coming in on the US suddenly. Big spike in the Australian. Oof, difficult to tell what that is. Euro's just come down hard as well. Don't know what that is. Waller is speaking at the moment, so maybe something that's just been said there, potentially. All markets moving at the same time here, which would indicate it's probably some US news. Yeah, everything's on the move. This isn't just because the stock market's open. This is timed. It's always timed, isn't it? Yeah. Market opens at 2:30. Tell you what, let's put a talking head in there at 2:35. 10 minutes before we release the PMI figures, so they can undo all of this. So, yeah, just a lot of volatility just coming at the open there. Gold, gold's hit ADR today. I think I've got the, pop-up alert set for the ADR indicator because I've just replaced the ADR indicator. So, yeah, big move coming at the moment on gold. Gold up to highest point in a long time, 3.5K for gold. Big increase in price. Lovely big strong pullback over the last 2 days on that. Stock indices obviously at the moment gapping up. We had the Tesla, I think it was Tesla earnings, was it? We've got today. Wow, a lot of movement. Look at this. So a huge amount of volatility coming in. Look at the size of that. So this morning, just with ORB, so the 5-minute range, or rather the 10-minute range here, absolutely huge. So we're going to take a break of those today. That's going to be a difficult one. They're all identical today as well. But this morning, lovely break this morning on the DAX and the FTSE. So this was the 15-minute range this morning. Had a stop out on the DAX. Can't quite see, that's behind my head. So the DAX this morning, we took a short, which stopped out immediately. Then we took the ORB long, which went straight up to target and stopped out in the second half. So banked 587 so far this morning. Look at that massive spike on the DAX. And the FTSE today, there's your 15-minute range. Again, oh, sorry, no, there wasn't a stop out on the DAX this morning. The DAX was a clean break. It was just long. The FTSE was the one that stopped out there, and then we got in on the long there. So that banked about 200 odd, and we banked about 300 odd on the FTSE and the DAX. So yeah, nice clean breaks today. So we'll see how we get on with these. Huge volatility. So we've got 4 minutes basically until the next break, and then we'll see what happens there. Trump's not happy with Powell. No. Afternoon, Zane. No, not happy with Powell at all. So basically what Trump's wanting to do is reduce interest rates, because reducing interest rates stimulates economic growth. However, it only stimulates economic growth if you don't put tariffs on everybody so that they are strangled and they cannot get economic growth. So his, I think, idea is, tell you what we'll do, we'll drop the interest rates because that will make them happy. No. Putting massive tariffs of 100% on China, where all imports come from, is never going to be rectified by dropping your interest rate from 4.5% to 3.5%. It's not going to make a blind bit of difference. We're talking 125, 145% tariffs, and we'll drop 1% off the interest rate. That'll fix it. Sorry, Trump. I think you'll find that most of the economists, of which Powell is the leading one, don't agree with you. So because he's not getting his way, what he said was, we will get them to drop the interest rates. If we don't, we'll see if we can figure out a way to make it happen, i.e. sack Powell, put someone else in charge. Not going to happen. Well, it might happen. I don't know. But at the end of the day, Powell isn't going to turn around and sacrifice his reputation and career because Trump wants something done. He can throw his toys out the pram as much as he likes, but dropping interest rates is not going to help with this. So the situation they're in at the moment is dire. So he's just looking for ways to get things done, but who knows? Brian, what the hell just happened? Good question. There we go. China tariffs likely coming down to between 50 to 65%. Okay. So again, backing down. Whoops, I did it wrong. Back down, back down, back down. That's all he's doing because he's done it all wrong, which we all know. Everybody on the planet knows it. There's not an economist on the earth that has said, that's a good idea. Finally, it's starting to come back down again. So we will see. Buy the rumor, sell the news. We'll have to wait and see if that is actually going to happen. White House considers slashing China tariffs to de-escalate trade war. US ICE 35% for items not deemed national security threat. 100% China levy for items strategic to US interest. You mean technology, that stuff that everybody in the world uses? God, make it up as you're going along. China report Iran's nuclear talks with the US. Right, so basically that's what that news spike was. Obviously, what we've had is tariffs basically destroying the US. Yeah, so everything in the US has been coming down, as we know. So US drop because tariffs. If tariffs are removed, the opposite will happen. We talked about this in the live room this morning in the members stream. Somebody asked if I think it's going to pop back up there. The answer is, of course, it will pop back up there as soon as the tariffs are removed. So stock indices, if the tariffs are removed, we will find ourselves back where we started. That was the tariffs being applied. That was rumor of the tariffs being removed, or the 90-day pause. The market realizing, holy crap, everything comes from China. China tariffs being removed. Yeah. So it's all going to pop back up if that is true. However, it's by the rumor. The truth comes out that actually we're not going to do that. Sell the news. So at the moment, you want to be buying the crap out of the stock market. So longs today on the US indices until Trump comes out, he is awake, and says, no, what they meant was, or one or the other. Yeah, this is exactly what we were talking about this morning in the live rooms. You cannot use any forecasting or any technical analysis or any fundamental analysis in this market at the moment. There is one thing driving this up and down at random, and it's got orange hair. No, it hasn't. It's got an orange face. So yeah, we'll see what happens today. But what can you do? Not a lot. Really difficult to do anything with this at the minute. So at the moment, it looks like the market does want to break long. We'll have to wait and see if this continues. Let's have a look at the PMIs. So mixed PMIs, positive manufacturing, negative services. So it's pretty much the same as the story we saw this morning. So as I said in the live rooms this morning with the members, these figures, whatever they are this month, mean nothing. This is why the market's not really reacting to these, I think, at the moment, because what you see here has got nothing to do with next month's figures. Next month's figures are all going to be elevated. Every manufacturing company pretty much worldwide has had a minimum of 10% put on their bottom line costs, minimum. So if they import anything that is imported, exported, China, US, and they use it in any other country in manufacturing, it's gone up more. So these PMI figures are the Purchasing Managers Index. These are the costs that businesses pay to produce items. This is going up next month, guaranteed. The figures that we're looking at here are last month's figures for March. In May, we will be looking at April, May. April's figures. And since the tariffs have come in, everybody's now paying more. So we know that these are all going to be going up, which is bullish for all of these, because what these will do is feed into the CPI index, consumer price index, which means that prices go up. When prices go up, we increase interest rates. However, during a trade war, you don't want to increase interest rates. So what does the market do with this information? Don't know. We've never had it before. So this situation is totally unique to what we've had in the past, even in previous trade wars. So at the minute, this data really doesn't mean anything. This is what's driving the market. So when you see moves like this, it's always good to go with momentum. So where we are at the minute, we haven't actually had a clean break yet. We're on our way. So options today, obviously, that is the optimal thing to do today based on that news, if that news is confirmed, and wait for pullbacks into propulsion. You're not going to get a propulsion gap on this because of the size of that candle. So you need to stick a fib on it really and just go for some kind of pullback and then continuation long. The danger you've got today, which is a clear and present danger, is the gap fills. So gaps get filled. Market's gapped up today. Typically, you will find this gap will get filled. However, market is gapping up on positive news. So it could be a gap and go. It probably will be a gap and go, meaning that we're unlikely, if we do break short, to hold shorts, which means that you want to be buying any dips that you see today. That at some point potentially would normally get filled, but we're not in a normal market at the minute. So we look at all the gaps that we've had. You can see that we've had gaps down on the indices on a regular basis, which are not filled. This one is now filled, which was the following day. This one did actually get filled on the same day. But the DAX, if you look at the DAX, we got gaps all over the place during this choppy couple of days that we've had. So when you see a gap of that size, typically the market will want to complete it. But if it's a fundamental reason for gapping, as in that one there, it doesn't tend to get filled immediately. Yeah, so it'll be later if it does. We still don't know if we're going into a bear market, which is definitely on the cards at the moment, because obviously with what's going on with Trump and his tariffs, there is actually no reason for the stock market potentially to rally at the moment. Good earnings are good, but long term is not necessarily going to be good, is it? So we have got one ADR to look at today, which is Aussie CAD. That's reversing right now. No reversal alert on it. You're very close. If this breaks down, that would indicate strong US and Canadian dollar, and we could see a March starting on this, but we'll wait and see. So PMI is basically not doing anything today. RSIs, there's nothing on the hourlies. We've had a really, really choppy week. I took the right week to take off. Very, very, very little movement, as you can see, across the board at the minute. The markets are basically just in shock. Again, we covered this in the members stream this morning, looking at reinstituting position trading strategy next week. And the problem at the moment is the market is this. Yeah. So a normal market will tend to be market structure based, where we have pushes and profit takes. This market we have at the moment is a push pause market, where we're just pushing and then we sit around and flag, and we push and we'll flag. These are news events, or rather Trump announcements. The market just basically goes, crap, readjust the portfolio, wait and see what he says next. Crap, readjust the portfolio, wait and see what he says next. Not conducive to position trading, because there is no structure to it at all. It's not the banks taking profits, it's the banks panicking and sitting around and waiting for something to happen. So prime example today of what we're seeing happening basically on a daily basis at the moment, isn't it? The market just goes parabolic. So it looks like I've had a break. So longs on all three by the looks of things. Yep, so triggered long all three. See what happens today. So if these do stop out, which looks like they're going to, be looking to take a break of the 30-minute range, which will be pretty much the same. The 30, so that's 5. So yeah, 5, 10, 15, 20, 25. So the next candle is going to be a 30-minute candle. So if we do stop out either this candle or the next candle, the 30-minute will be reapplied in the same place, and then we'll go for a break of the 30. Assuming the market does break today, obviously. If not, we'll have to just try and recover those costs tomorrow. White House considers slashing China tariffs. Yep. Forex Factory. Brian stepping out for a smoke. Oh dear. Trump will take the big L and walk away claiming victory. Well, he's already claimed victory, hasn't he? Remember when the stock market collapsed? This was the thing that I actually laughed out loud on the settee when he said it. Yeah. So he causes this. Yeah. And then he claims to have created the biggest day on the S&P 500 in history. Yeah. It was this day. It was like, it's tremendous. It's a 9.6% gain in the S&P 500. It's the biggest in history. You created the biggest collapse in history. You can't take the credit for the pop and not take the credit for the drop. Yeah? You pumped the market, made your mates rich, broke the law, and you're claiming it's the best day in history. For you, maybe, but everyone else in America. So, yeah. Somehow he'll manipulate it to his credit, won't he? That's what he does. He's very good at it. Classic market manipulation, yeah. Afternoon, Blue Trader. Spring is coming. Hopefully. For how many years are you trading? 18. And I know that because it's 1 year older than my oldest son. Because I went, holy crap, I've got to pay for a child. I need to do something for an additional income. And that's when I started trading. David, good afternoon. Thank you very much for the $10 tip. You didn't think I forgot about you. No, I didn't. One of these days, David, I'm going to come on here dressed as a goat. That day, you're going to have a shock. Thank you for the $10. Much appreciated. Christ just hit full TP with micros on this 5-minute drop. Done for the day. Good job. I thought you were going to say something about the Pope. So stopped out on those longs. We'll be resetting on the 30-minute ORBs. Is this actually the market confidence, or is this the market panicking again? Stopped out on all three of those. So reset. Go for the next run. What kind of ORB do you use? It's all explained on the website. You watch that video, that will explain strategy. Basically, we're trading the 5, 10, 15, and 30-minute ORBs. So whichever basically sets up within parameters which are optimal. Hopefully that 30-minute range will be within. Yeah, that's fine. Yeah. So we will reset after this candle close in 2 minutes. And then we'll see if we can get a break long. Or short, whichever way it wants to go. Difficult to say today, isn't it? All these markets very, very correlated at the moment, as you can see. We're getting. It's almost like you want to drop one of these indices at the minute. They are very, very similar movements. The S&P and the NASDAQ usually are very correlated, but the Dow typically does its own thing because it's industrial sector stocks. But if you look at the price action on this, it's almost identical. In fact, very hard to tell what's what at the moment. The price action is virtually the same. So very high correlation on all the indices because the market is just buying and selling business at the minute. It's not really sector purchases going on at the moment. It's buying and selling stocks. It doesn't matter what it's in. You want your risk on or your risk off. You don't want your risk on in industrial, your risk off in tech. You want off, everything on. That's what it's doing. It's just absolutely nuts at the minute. But hey, we will see what happens. So we just wait for this candle to close. If anybody's got any FX pairs they want to have a look at, let me know. I'm going to quickly whiz through some of the FX pairs in a minute. I explained this morning in the members stream, I'm going back into position trading next week. I'm getting the EA set up this week with my FX pairs on it. But I'm not going to use indicators for automation at the moment. I'm going to use manual entries and then position trade around those manual entries because I don't believe at the minute that indicators can be trusted, any of them. Doesn't matter what it is. Even ADR at the moment, you don't know what to use. So I want to use the 1 minute pre-market. No, I wouldn't. Doesn't work. I've tested it thoroughly. So you can use 1 minute pre-market. You can't with the opening range breakout EA version 3, but you can with ORB version 2. And ORB version 2 is available on the MEQL5 marketplace. That one you can trade any range you like. ORB V3 only operates on M5. Reason being, because that is the one that is the most profitable. So there's no point in trying to trade 1 minute algorithmic chop. As much as you'll see people on prop firms going on the 1 minute charts, ask how many of those are actually profitable. Of the 3,500 top step traders, there are around about 15 of them that actually get paid that are on 1 minute charts. Yeah. So if you want to be one of those 3,400 and whatever, feel free. But 1 minute is just suicidal. Okay, so there's your 30-minute ranges in. Load of volatility just hit at 3 o'clock. Not liking that at all. Way too much volatility there. That's going to stop out. It's going to be one of those days today. If this trade fails, I'm out anyway. So there we go. Stopped out. Done for the day. This is not going to be one of those days you want to be trading. This market's all over the place today again. So that was new home sales. New home sales does not move the market. When have you ever seen new home sales move the market to that extent? They're just using it for liquidity dumps at the minute. So it's stopped out on S&P. I mean, if this goes, fine. But if it doesn't go, that'll be me done. I'm not going to try and risk any more on this today. It's just all over the gaff. Stopped out NAS, stopped out S&P. So the only thing I've got running is the DOW. It's too whippy. Far too much going on today again. But if that DOW does break long, we're not going to get far, are we? So if the DOW does break long, which I don't think it's going to, I think it's just going to be whipsaw today. I should be able to just recoup that back to break even. What I would rather is something happens where Trump comes out and says 200% tariffs on China. And then I shall pay off my mortgage. Would be nice. Do you let the EA enter the trades and then close them manually, or TP for TP and SL? Up to you. You can let it trade automatically. You can set it up to do whatever you want, or you can adjust. So these levels here are partials, so you can adjust those to whatever you want. So the EA will close out a percentage at those levels automatically for you. You can either adjust them. So basically, what I do personally is I look at levels. So this short, if it breaks short, for example, today, yeah, that is where I would put my partial and assume they're going to do the gap. So if the EA automatically placed it there, for example, you could use a Globex low if you want to, but if it's going to hit the Globex low, it's likely to run the gap fill. So I would place my partial there. But if you want to let it run on full auto, let it run on full auto. It's entirely up to you. My product, all of my products that I create and I use are, for me, automation tools to automate things I do every day. I will intervene with everything that I do because I don't believe you can have full automation in trading that is flawless. So I will always jump in, basically. So, you know, if you take if something like this happens where you have two news events that spike the market into a whipsaw like we've had today, you don't want to be trading. So rather than let the EA carry on taking losses today, turn it off. Now, the EA may take a short here and it collapses down and fills that gap and makes me 3K. I don't know the future. You don't know the future. So do what you want to do. It's all trading is discretionary, even if you use automation. Any strategy to use, it's all discretionary. You might have a plan, but when the plan is executed, discretion will kick in at some point. There's no trader that follows an exact plan every single day because you can't do what automation does in backtesting because you're going to be on holiday, you're going to be asleep, you're going to be at the doctor's when that trade would have been taken, or you're going to be sitting there using automation and you're going to intervene in trades that would have played out automatically. So everything to do with trading is discretion. But certain stuff that you do every day, like measuring distances, placing pending orders, that's what I use automation for. But I will adjust where I see price going and take partial profits or full profits when I see things. This morning, for example, these trades here. So that FTSE, yeah, I decided to close that manually myself because I took a loss there. So that loss there was about 230 or something. We then broke long and I made about 500 on the long. So I decided to close it out so that that trade paid for that trade. That was my decision. It was the right decision because it reversed about half an hour after I took that trade off. But if I'd have left it doing full automation, it would have come down and it would have stopped out on that trade. So some people will have been stopped out on that long today. I actually made a profit. What was the best thing to do today? At that point in time, I didn't know. I did what was best for me, not what was best for anybody else. I needed that because of that. Some people on the DAX this morning, when we had that nice clean break long, will have taken it all off there. I decided to take half of it off there. Well, actually, it's 3/4 of it off there, and then let the rest run on a trailer. That was the wrong thing to do. I should have taken 100% of it off there. But all the EA does, and all EAs do, are follow a set of rules, place orders, and do something with a stop loss and a take profit. Whether that's the right thing or not to do, they don't know because we don't know. So do what you think is the best thing to do. I just do what I think is best every day. We're breaking long now on the FTSE and the DAX, which means that the S&P, the NASDAQ, and the Dow will probably want to do the same thing. So there is a chance that this Dow trade is going to play out. It's the only one that didn't get stopped out, and it was literally by a gnat's whisker. Survived. So UK indices are rallying. So indecision. If we break that high, I suspect we're going to rally today. If we break that low, I suspect we're just going to go into rotation today. See what happens. Right, just whipping over to the FX side of things. Aussie dollar Swiss has just hit ADR. We've got a few ADRs triggering. Well, Aussie. So Aussie CAD, ADR. So we hit ADR to the upside. Watching this double monthly level here at 150 ADR today for a potential bounce. Aussie dollar Swiss ADR. I got the same ADR on there. It's a 4-hour chart. Why is that an ADR spread? Okay, yeah, it's just about an ADR. Different calculations slightly. So yeah, ADRs, sorry, Swiss. ADRs, the upside. I was on the wrong chart. I was looking at that thinking, why is that not hit the ADR line? Anyway, Aussie dollar Swiss. So ADR hit to the upside, so potentially a pullback on the cards from there. But as I said, you can't really take any indicators into account at the moment because all indicator calculations are going to be off by whatever goes on with these parabolic moves that we're seeing at the minute. So for me, at the moment, I'm looking for these propulsion gaps to get filled, which means we need to break out of that 2-week high. If we get above that 2-week high, I suspect we're going to come and retest the origin of the move down. But that is going to require everything to get put back to where it was by Trump, or as much as possible, meaning that he's going to have to reverse those tariffs. We are on the way to reversing those tariffs. So everything that you see in FX at the moment that has happened since the beginning of April, when the tariffs kicked in, will essentially undo if that is true what's been said today. How long it takes to happen, we'll have to wait and see. But from a position trading perspective, longs basically on pretty much everything at the minute. Back to those origins of those moves. So the 1st of April, when those tariffs kicked in, is up here. So everything that basically we've got. So if you think about a monthly chart, the candlestick on the monthly chart is going to look like that potentially by the end of this month. A huge hammer, because we started there. We've just basically sold off for the entire month. If he can convince the market that what he's doing with the tariffs, with the freeze and undoing of the China tariffs is correct, we'll get some faith back in the market. The stock markets and the FX markets will all re-rally back to potentially where they were. So that's potentially what you're going to see from a monthly candlestick, which means that the entire market will start buying everything. However, as soon as a new announcement comes in on a tariff, we'll be going back the other way. So Aussie US is obviously already undone. So yeah, big moves potentially all the way back up now. So market reversal alerts have already gone in. So we're looking basically for continuation market structure to the upside. But like I say, buy the rumor, sell the news at the minute on all of this stuff. So what I'm doing for the position trader EA with the position trading account starting again from next week is I'm just going to be taking manual trades. I'm not going to be relying on RSI or ADR at all at the moment, because all of the indicators are obviously lagging price and everything is completely thrown out. All indicator levels are just all over the place at the moment. So all I'm going to be doing is looking for what I think is going to happen with trend continuations with what we've seen so far and what is said. So today, decision-making process would be probably going to undo a lot of this move. However, if he changes his mind, we'll obviously go back in the opposite direction. So buying up things like propulsion gap fills, but the additional entries, I'm not going to be using measurements of ADR for scale-ins. I'm going to be using levels. So a little bit like with the zone trader strategy, just measuring roughly where I want to take additional entries and manually getting into them. So it means going back to the way that I used to trade prior to automation, in the fact that I'm just going to be basically hitting the buttons when we get to logical areas, and worrying less about scaling in at set distances on structure breaks and 3-bar reversals and things like that, and just basically getting in at areas that look logical for potential bounce points. Yeah, so but the main thing that I'm going to be focusing on is what to trade rather than what sets up, basically. So one of the most important things at the moment is keeping the risk low, because we just don't know what is going to happen in the future, in the next few weeks, in the next few months. Nobody knows what's happening with interest rates now. Nobody knows what's happening with inflation now, although we can all obviously guess. So you're not really going to know roughly what direction currencies should be going in. We don't have that certainty at the best of times anyway, but now it's even worse. It's almost impossible to predict whether we're going to get safe haven runs or not, because it's down to whether or not Trump says something. So I'm going to assume that we're going to get continuations in most of the moves that we've seen. So these pullbacks that we're starting to see forming now, in theory, we should get continuations on them, unless he completely undoes everything that he's done so far, which, of course, it could all go back to the origin of the move. But then it's probably not going to be the same, is it? We're not going to have the same faith in the US. We're not going to have the same faith in the stock markets. The plans that all countries have put in place, pound included, are all going to change. So trading partnerships are going to be completely different moving forward, because it doesn't matter whether he undoes these moves. He's lost faith. All countries have lost faith in dealing with the US now. So he's basically segregated the US as a currency. We're not interested. So it's a case of we are still going to trade, but it'll be on our terms. The analogy I used this morning in the members stream was to do with oil. If you look at the oil price when it kicked off in Ukraine and Russia, the whole world uses oil. So the Ukraine war kicks off, oil price goes through the roof, the pipelines are all controlled by Russia and Ukraine. The whole world suddenly realized they are 100% dependent, their economies, on Russia. So what do? We all went, screw that. We need to change our trading partnerships. So we started buying Canadian and US oil, and we started buying oil from other places around the world. We started changing, infrastructure, so that we had different ways to deal with inflation caused by oil prices. What's just happened is the US have basically done the same thing. They've told the world how reliant they are on US infrastructure, US as a currency, the dollar, everything's traded in it, oil, gold, the whole lot is traded in it. You've just shown us that you can really upset our economies by screwing around with us. So what are we going to do? We're going to diversify. We're going to move away to China, mainly because China manufacture everything and import and export everything. We don't need to pay in the dollar. We can use the yuan. Yeah, so that's basically what he's just done, which has caused this. It will probably bounce back, and the stock markets will rally back. But the businesses around the world are going to change the way that they trade, and the countries are going to change the way that they trade with each other now, because they're going to have to diversify your portfolio. It's only when you get stung you realize that how exposed you are. We got stung by oil. We changed our working structure with oil so that we didn't have the dependency there. We now have the same thing with the dollar. So from a fundamental perspective, I think it's going to change dramatically. Well, that's a lovely short on oil I've got on there. Look. How's that for a reversal alert? Oh, I'm out of my oil short. I've TP'd on it. Oh, well. Damn. I should have held it. Or did I get taken out on a trailer? Let's get taken out on a trailer on it, I guess. Anyway, so yeah, what I'm going to be doing with FX is basically using areas of interest to try and just buy continuations, because I think that everything that we've seen with US dollar weakening, i.e. everything strengthening against the US dollar and stock market collapsing, is probably going to either continue, or if it doesn't continue, it's going to get stalled while we're trying to figure out what to do, in which case you're just going to find it easier to sell the dollar and sell the stock market moving forward, which means that all the moves that you've seen happening, like this Aussie dollar commodities collapsing, probably better on shorts. You're going to get faster reactions on those because it's fear that drives this down. And when we get any smell of fear coming through again, they will panic. So what you saw here is probably the best way to trade moving forward. So I'm going to be picking instruments that are non-correlated so that I can get on to continuations on these sorts of moves, which is basically just pressing buttons when you get pullbacks. Very, very, very simple. But I discussed it this morning in the member stream, and obviously I'll get it all set up over the next week. I'm ready to get cracking again next week. But, you know, stuff like this can easily happen again. It's just one word out of his mouth and the market will just panic. So just be aware. Risk has got to be kept very low at the minute to accommodate the crazy one. Stopped out of the Dow, so that's me done. Can't do anything with this today. It's an absolute mess. You can't trade whipsaws like this. Look at the size of this today. I mean, it's just parabolic whipsaw after parabolic whipsaw. Oil is going through the floor as well. So just have a quick look at what it is. Wednesday, isn't it? Although we've had a bank holiday, so is oil, was that the oil price? Or is it coming out tomorrow? Oil, yeah, so there you go. So 3:30 in 10 minutes. Christ, we haven't even had it yet. So it's 3:30. Crude oil inventories are coming out in 10 minutes. Oil is collapsing through the floor as it is. Do you trade all indices during the open, including the Dow, NAS? No, I trade the US indices in the US Open. I trade the European indices at the European Open. Go watch the video. It'll explain everything. There's also a, on the website, there's a strategy section here. And there is sort of a breakdown of the opening range breakout strategy here. This is the old version. So that link there takes you to the old version of the opening range breakout strategy. So this is version 2.7, which is available on the MQL5 marketplace. So this one, you can adjust it to trade any time you want, really, on any time frame. The opening range breakout version 3, that one only works on 5 minute, and that is only available on the website. Basically recoded it. There's problems with the marketplace, and I couldn't get it uploaded to the marketplace because they have certain rules in place, which mean you cannot force things to use certain time frames and things. Long story short, EA wouldn't go up to the marketplace, so I now sell it direct. Because the marketplace is great. We love it. Treasury Besant is speaking as well. White House officials, China levy changes wouldn't be unilateral. Several OPEC members want the ground to approve another accelerated oil output increase for June meeting on 5th of May. So that's why the oil price has just gone through the floor. They're going to increase production. That buy stop. So they're looking to increase production. Obviously, more oil produced equals higher stocks. Higher stocks equals lower prices for oil. It's just supply and demand. Would look at lowering tariffs on Chinese imports pending talks with China, according to a source. Any steps would be in conjunction with China discussions, not unilateral, according to a source. So basically, this is, as I just said, buy the rumor, sell the news. So we would look to, we're thinking about, we might, we do. Yeah. So don't buy into this bullishness. Not necessarily bullish. Just cost me 1,500. Anyway, so yeah, not a lot you can do with it today. If the US confirm something today, i.e. we have done, then you'll probably get a very big ADR day. If it's all rumors, you're just going to whipsaw all the time. So this is the problem with trading at the moment. There is no logic. Yeah, there's nobody on the planet right now that can say the best way to trade this is. There isn't a best way to trade this. This is just algorithmic chop. The best way to trade this is wake up in the morning, press either the buy or the sell button, and come back at the end of the day and hope it's gone the right way. If you use any kind of stop loss based strategy in this type of market, when it is doing this, you're just going to get stopped out. ORB, when it breaks, like it did this morning, fantastic. There was no whipsaw this morning. DAX, no whipsaw. We just basically pushed down, we pushed up, very big candles, very big wicks, but we just went clean. Nice and easy. When you get this type of choppy price action at the open, there's no strategy on the planet that's going to survive this. 1 minute charts, yes. But again, you're flipping a coin, aren't you? If you drop down to 1 minute, take some kind of bear candle, maybe. I can't remember this level of manipulation. It's worse than a depegging. Yeah, it is worse than a depegging. Even the Trump supporters. I was chatting to a guy in who messaged me in Telegram the other day, who's an American, and he voted for Trump. He loves Trump, and I get where he comes from. He's a great businessman. He, you know, I say great businessman. Businessmen that make it tend to make it for a reason. And, you know, he's good at what he does, but he's not good at running the US as a business. And when things go wrong in business, you have people around you that you can pull strings with. So you scratch my back, I scratch yours. And at some point in the future, I might need it scratched again. Is that okay? Verbal gentleman's agreement type thing. This is what we're seeing here. Yeah. It wasn't a coincidence. I can't believe it was a coincidence that he came out on this particular day. Can't go, I need to go back further. Yeah, it's not a coincidence that here, there was in my news feed, Trump saying, now is a good time to buy. Yeah. And then literally hours later, I'm removing the tariffs. Yeah. And 2 days earlier, there was a rumor that he was removing the tariffs, which was very quickly squashed by the White House, i.e. leaked and lied about, manipulated and pumped. It's an absolutely typical pump and dump. Yeah. And the guy that was talking to me was like, I love Trump. I really like what he does and what he did for the country last time. Fantastic. You take money out of people's pockets like this, they're not going to love you for much longer. This is the problem. And what he's done is he's taken the money out of the pockets of the world. Yeah, you can't play with your country as if it's your business. Yeah, the UK and Europe both turning our backs on America right now, and we're going to China. Yeah, you may not rely on us for much, but our little 5%, their little 5%, their little 10%, all of a sudden, if you imagine your country, businesses, profit margin dropping by 20% like that, go and ask our friend Elon Musk what that feels like. It's going to hurt. And it's only going to hurt your employees. In a business, when the business profits drop, who's the first people to go? Employees. You cut costs. Yeah. Healthcare, employment, everything is all going to go down. Yeah. This was not announced when he was doing his campaign. Do you know what I'm going to do? I'm going to crash the stock market. If that was his plan, what he should have done is told us here that was going to happen. Because I just would have put a sell order in and added to it for a week. But that's not what happened. So, yeah, it is manipulation. The depegging, to be fair, the Swiss, when they depegged the franc, talked about it. But again, it was an option in the same way as the Swiss talk about negative interest rates. They're always an option. And they've done that as well before, haven't they? And there's a good chance, I think, the Swiss will go back to negative rates in the next 3 months, which means that you want to be selling the Swiss franc unless Trump puts tariffs on. And then you want to buy the Swiss franc. What do you do with that information? At the moment, currently on the Swiss franc, you should be selling the Swissy, which means that you're going to do that. But every time Trump opens his mouth, the safe havens are going to benefit, which means you should do that. So I think this is probably the first time in history I've seen the Swiss franc reduce interest rates faster than forecast without telling anybody, and the thing pumped. Just doesn't happen. It's not economics. That is not the way that this usually works. Nothing is going to do what you expect it to do. So will the market get back to propulsion gaps in the future? Who knows? It's going to be interesting. Anyway, so that's really all I've got for you today. There's not really a lot else we can do with this price action today. If you're going to trade it, flip a coin, but keep your stops nice and broad. You know, the trouble with this type of range at the moment is if you're going to take any kind of range break or any kind of price action, you're going to need a stop loss, which is of a decent distance, so you don't get taken out on all the chop, which means you're going to have high reward ratios, which means it's going to be harder for the market to get to those because you're going to need to put those targets further away as well. So how's 007 doing? Needing work. I need to change it. The logic I've got in place is great and it's working very well, but it would work better if it was working on individual instruments rather than as a portfolio. So I'm making some changes to it, but yeah, doing well. It's had a bad week actually in the last week. Not say it's a bad week, it's a mediocre week because some of this price action on some of the FX pairs has hurt it. So it's had a couple of losing days. So not a lot you can do about those. Yeah, breakout strategies do not work in ranges. So, and this is, you know, again, I was talking earlier about the trouble with the market at the moment is it's either parabolic or doing nothing. This is what we have. There is no market structure. Yeah. So anybody that's a trend trader will be waiting for a breakout and pullback. They're not getting it. Anybody that is a breakout trader that's waiting for breakouts, you don't get it in this particular period. However, when it does break out, you make an absolute fortune. So strike rate on trend and breakout strategies is around about 30% typically. You have to sit through these bits, waiting for those bits. The problem is obviously holding these parabolic moves. That's the hard part at the minute. So got on some beautiful moves yesterday on FX, mainly because the US dollar rallied. So, you know, things like Euro US dollar down, made some nice money on those. But 2 days before, 3 days before, we got a little bit there. It's recouped the losses, but it's like any strategy, all strategies. There's only 3 types of strategies. There's breakout strategies, there's trend strategies, and there's mean reversion strategies. Yeah, the market is only ever in 3 states. It's either ranging, mean reversion, it's breaking out, mean reversion, or breakout, and it's trending, mean reversion, or trend. Which is why we're mean reversion traders, because it mean reverts in a range, it mean reverts in a breakout, and it mean reverts in a trend. At the minute, what we're seeing is nothing but parabolic movement and then mean reversion. But you're going to find it hard to use any indicator at the moment to take mean reversion trades because it's either extended and parabolic or resetting. So strategies, again, we discussed all this morning in the member stream. Very, very hard. You won't find many people at the moment that have got a successful strategy they've used in the past working. If you're adapting and you're just taking stuff and holding it, that's how you make money. Risk reward at the moment is really all you can do. But as for strategy, you kind of need to cross those, close your eyes, and press button A or B, because you're not in control of it, neither is the market at the minute. This bloke is in control. He hasn't actually said anything. There's your crude oil inventories. Let's just see what happened to oil. So this is the crude candle. Already doing a lot, so I'd be selling that for some bearish price action in the next half an hour. Do you think we will ever go back to normal? We got 4 years of this. I don't know. Again, I covered all this. Were you there this morning, Ryan? No. Covered all this morning. What is the new normal? Yeah. Again, we don't know what normal is now. Yeah. The last Trump presidency was very, very, very different to this. Yeah. He did trade tariffs last time, but not to the extent that he's done them at now. That board with all those percentages on for every country on the planet, including the ones with no human beings and only penguins living on them that got tariffs. He basically taxed the world. Yeah. If you get taxed that badly, you move house. You move. Yeah. If all of a sudden in the UK, our government turned around and said, sorry, guys, we're going to have to put you from 20% to 50% taxes, I would go, do you know what, family? Australia's nice at this time of year, and I'd move. This is what the world is doing. So when you have a new world order, you have a new way of market moving. Yeah, market condition is going to change. How it's going to change, we don't know. There's lots of forecasts out there at the moment, and that's all that anyone can do is go, this is what could happen. But we've got no precedent for this. The same way as in COVID, we had no precedent for how we would recover from a pandemic because we'd never had one. The financial collapse in 2008, we hadn't had one before. The tech bubble, we hadn't had a tech bubble before. Yeah, there's lots of things that happen and the market suddenly changes. ADRs will change. Volatility will change. The way the market moves will change because banks and institutions will use different investment vehicles dependent on what they see now as being safe and unsafe. How FX will be affected, oil will be affected, and the dollar will be affected, and what the new norm will become, we'll have to wait and see. But again, I covered again in the live room this morning. One thing I can guarantee, the market will move up and the market will move down because this is driven by bank and institutional price action and order flow. Banks and institutions are what makes the world go round, what makes economy work. Therefore, they will continue to buy and they will continue to sell to make profit. When they do that, there will be a push and there will be a pull on profit take. How big, how fast all of this now happens and what the average daily ranges become, that is what we don't know. But the real question to ask is when? No idea. Because we've only just had 1 month of this. You can see what happened and now what the market's doing. It's returning to almost normality, but with these kind of heart attacks in it. Yeah. So we're like, holy crap, look at the volatility. Undo the volatility. Right. Let's sit around and wait. And then you get a sudden, what the hell? From nowhere. I think this is the main thing you're going to find is going to be different moving forward. Is I think fundamentals are going to play at the moment a lot less of a role in the same way as they did when COVID hit. Yeah, what did we all do in COVID? We all dropped our interest rates to zero. Why? Because we needed to go reset. Yeah, the world's resetting because the world's just suddenly realized that, holy crap, the dollar's got complete control over our economy. Not having that anymore. Yeah, in the same way as Europe got told, we're not paying for your defense anymore. You've got to do it yourself. All right, Good idea. Not thought of that before. So now what we're going to do, not buy a load of American stuff. We're going to start manufacturing all our own tanks and all our own jets and all our own XYZ. Who's going to lose out? The order books in America. Yeah, it's all going to change. Stock market dependencies will change. Yeah, but how and when, you can't tell. This is why you have to be adaptive and change. You know, strategies change. When you do back testing, you can see very clearly. The best thing to look at is the S&P 500, because the S&P 500 is the real gauge for world economics. Basically, these, you know, COVID, businesses closed, not able to trade, stock market prices going up, can't sustain that. Bear market, rally, everything's going well in the world. Trump arrives. How long is that going to last? Will it continue to do that? Because we're not going to be trading with the US as much. Are these S&P 500 businesses going to flourish or diminish? If they are, where are we going? The yuan. So what should we be buying? Chinese stocks, Chinese stock indices. They're going to benefit. But I've never traded the Chinese stock markets before. So everybody's going through that learning curve now, because they're all going to change. Everything's going to change, isn't it? Motor industry, DOW, or the German car manufacturers. Why are we bouncing back so hard? Tesla, screwed. Who's the second biggest, or rather now the biggest car manufacturer, electric car manufacturer in the world? BYD, where are they? China. All change. So who supplies BYD components? Because those stocks that supply Tesla, we don't want them anymore. We want the ones that supply China. Yeah. Phones, all going to change. Apple. Yeah. Your iPhones went up by 50%. Whoops. Let's roll that one back. Immediately, Trump saw what he did wrong. But the trouble is, he does it, and then he thinks about undoing it. And that's what causes stock market and FX volatility. That's not going to change, is it? Unless somebody's got a gag for Trump, this thing's going to be like this for the next 4 years. So we're going to have to adapt. And again, I keep saying, I said this morning in the live room. I'm basically repeating half of the live room from this morning. But this thing is going to be the most important friend you've got, ADR. Yeah, average daily range. Because it doesn't matter what the markets do. This indicator, ADR, and this dashboard are dynamic. It's the average daily range. So if the markets are going to go crazy, this is going to tell you where you should be targeting and where you should be entering mean reversion. Yeah, so ADR is really the thing that we have to focus on even more now than anything else. But at the moment, it's the case of what is the best ADR to use, because this thing is just having these crazy days put in. So at the moment, I've gone back to ADR 10 for the minute, because if you look at the last 10 days, for example, on the DAX, we've got huge move, medium move, and then contraction. So we've got 5 days worth of contraction, 3 days worth of craziness, and another day's worth of craziness, and a gap up. So if you look at the last 10 days, you're taking into account, holy crap, plus what I think is becoming more the norm at the moment. But that's until he says something new. So those ADRs are probably about right. But as the market stabilizes a little bit, these ADRs are going to start to come back into play. But right now, since the whole of this month has been chaos, the money I've made this month has been pure luck. Yeah, it's been in the market at the right time when something like that happens, and bank it. I withdrew this week all the money I've made out of ORBs, because that's become the main income. It's holding those moves, and the breakout strategy that I've been trading. Yeah, those moves are not me going, hey, I'm a brilliant breakout trader. I don't trade breakouts. But right now, I identified that breakouts is the thing to do, because what you want to do is be in the market or ready to be in the market when he says something. That's where you're going to make your money. But I'm not going to do that forever, because you know the market's not going to be able to sustain this type of volatility. Or maybe it will. We don't know, do we? Who knows? Do you stop trading after one loss of ORB? No. Use the word normal sparingly when it comes to trading. Yeah, there's never been a normal in trading. Brian's right. I mean, there is no norm. You know, that saying the market can stay irrational longer than you can stay liquid is 100% true, and it's proven everybody right many times over. Yeah, when the market goes in one direction for a sustained period of time, everyone's like, this has got to be the bottom. It's not got to be the bottom. It's doing it for a reason. Yeah. Only banks and institutions have got the power to move this thing. Yeah. And when banks and institutions do not know what to do, there's nothing that can help you. Yeah. It doesn't matter whether you're a good technical trader, a good fundamental trader. It doesn't matter how you trade. This thing does what it wants when it wants. And there's literally nothing you can do about it. So at the minute, for me, it's a case of reduce risk. And the reason you can reduce risk and still make decent money is because the moves are much bigger than normal. So if you reduce your risk and it moves twice as far as normal, you make the same amount of money as you used to. However, there's times where I've had the right trade at the right time and killed it, but not through skill. Yeah, half of trading's luck. If you think about it, you have a binary decision to make. Whenever you take a trade, you are either A or B. If it moves A parabolic, happy days. If it moves B parabolic, you stop out. Yeah, those A parabolics, those are the ones you hold. Yeah, so ADRs are, you know, when we've had those 300 ADR days, been on some of those. It's all you can do at the minute. Yeah, it's just an awful lot of luck, but you still need a strategy. Yeah, so things like ORB, fantastic, but days like this, can't do anything with it. Yeah, you have to sit through these, but it's no different to normal, is it? You know, you do the back testing with the ORB EA, you will see day after day of this crap go past in your P&L. What does your P&L do? Does that? Then what happens? 3 days of that, and your P&L goes through the roof. You've got to sit through this. Loss is part of the game. You're not going to win every day. You're going to lose a lot. It's a breakout strategy. Yeah, strike rate's 30%, 30 to 40 max. That's a breakout strategy. You won't find anybody trading breakouts with an 80% strike rate. They are the line. It doesn't exist. Market spends 80% of its time range bound. Therefore, breakouts are the minimal, the minority, aren't they? But yeah, norm. What is norm? There is no norm, because norm is basically whatever this ADR is for a sustained period of time. So if ADR stabilizes and stays like that for 2 weeks, that's your norm. When it starts going like that, you adjust, and that's your norm. But for me, the most important thing is identifying how it's going to get from A to B. If it gets from A to B the way it used to, happy days. Everything will start working again with no problem. If it gets from A to B like that now, you're going to need to change the way that you travel, which means that you cannot get on these because they move too fast. So therefore, you've got to be in the market waiting for them, which means that you need to adjust strategy. Strategy has to become more breakout than mean reversion, because it's not reverting, is it? Intraday, it is. But the days where it doesn't, you're stuffed. It's going to be fun anyway, isn't it? Right, I've got to go because I've got a meeting. Well, not a meeting, I've got a phone call, which for some reason I think they may have just phoned early. But anyway, so I'll be back on Friday. And Friday we're going to cover, obviously, what's happened this week. Keep your eyes peeled on obviously the news feed. This is the most important thing out there at the moment. Tomorrow's news, we've got unemployment claims coming up tomorrow afternoon. Again, it doesn't matter what this is. Businesses with high tariffs are losing money. Losing money means reducing staff. Reducing staff means unemployment claims go up. Unemployment claims go up means reducing interest rates, which means currency down. The dollar's already collapsing. That thing's going nowhere but up. So can't see anywhere to go but down for the dollar. However, we're interested in next month's figures. This month's figures is March. March, we had no tariffs. So all of the data that we get coming out here is historical and is completely restructured based on tariffs. So this is unlikely, I think, to move the market very much tomorrow. However, the market has to move on a catalyst. This is a catalyst. So we might still find the banks are using this to drive volume through, which is highly likely. So I'll be back on Friday morning. So we'll have had retail sales by the time I come on at 8 o'clock. We've got SNB talking head as well on Friday morning. Again, reconfirmation of dropping interest rates probably expected there, which means negative Swiss, unless Trump said something, which means you want to be in the safe haven, which means positive Swiss. Take your pick. Retail sales for the CAD basically also on Friday. Again, retail sales is one of the weaker indicators. And at the moment, don't think it really do anything. So I think news-wise this week, PMIs were the main thing. We've had them. The market hasn't moved. So again, just confirmation that news is not moving the market at the moment. Trump is. So we just got to wait for him to say something. We are out of extreme fear. Look, we were 27 yesterday or 23. So again, market confidence starting to trickle back in. Bullish indices, bullish US. We're not seeing it very much, are we? But it is starting to creep back in. So all it's going to take is for some kind of agreement on those China tariffs to be reduced. And we'll be popping up and going back to potentially the new normal. But the new normal is not going to be like the past normal, is it? So, but we should, what we really should be saying is we're not looking for a normal, we're looking for stability. For the markets just to get back into a rhythm. Yeah, because this is how we make money, by reading markets. With no rhythm, you can't read the market. You are just hoping for a movement. So that's what we will get back to if we get into this sort of area. We'll get back into hopefully some more normalized market structure. How big it will be, doesn't matter. ADR will tell us, won't it? So we'll see where we go. But yeah, we're just scared now, not very scared. It's better than being very scared, isn't it? Boeing CEO, we plan to redirect supply of planes meant for Chinese customers to customers who want near-term deliveries. There you go. Boeing. Holy crap. We can't sell planes to China anymore because the Chinese won't buy them because they cost too much. Anybody want any planes? Yeah, I will, but I've got loads at the moment, so I'll take some off your hands at half the price. Boeing stock. Caused by Trump. Prime example of real world starting to kick in. Yeah, he's going to really realize what he's done. I think sometime mid-May, they're going to be like, what do you mean Boeing's going bust? Yeah, it can happen. Yeah, big companies need big order books. Big order books are now closed. It's going to be a big mover, this tariff. We're going to see a lot of different stuff going on. Right, I'll leave it there. Anything you need, let me know. I'll be in Discord or Telegram. And I'll be back Friday morning and Friday afternoon, and we'll trade the indices and we'll look at what else has happened over the last 48 hours. And there will be some. All right, so have a good day. Anything you need, let me know. Otherwise, I will see you next time.